The answer is yes. I would say that we have seen two phenomena over the years. First was just a general kind of understanding of the platform, and then as the exposure grew, then we're seeing kind of scaling of the adoption of the investors. But then what's interesting, for example, like most recently, December was a pretty tough month for equity markets. We saw a lot of equities, kind of spike down in pricing at that point. And that was one of the biggest months well, it was the largest month of that year for investor adoption. And so I think what we were seeing at that point was investors understanding and acknowledging that the equity markets had had a really good run, and that we were seeing that what was happening in December, nobody really knew, but some people were concerned that what was happening in December was maybe the early indications that the end of that bull market for equities was ending, and that they were then jumping over into hard assets and saying, well, I want to go into an alternative asset class. I want to go into an asset class that is backed by income at the property level, and that one that is more long-term in nature and is not as cyclical, daily cyclical as equity markets are. And so we've definitely seen that process. And I would say that overall, but the overriding theme is not necessarily just kind of a whipsaw effect of what's happening in the equity markets. It's really more of an acknowledgement that commercial real estate should be a part of investors' portfolio, and it should be a component. Now that component can range from on the low end, high single percentage digits to 30, 40, 50% in the case of someone who's really high net worth. But that's how a lot of investors invest, and it's just that overriding realization that commercial real estate is a component of a diversified portfolio, and that they should put it into their portfolio, and that now they realize that they have an avenue to do so.
Are they also taking that same approach by, looking at the multiple offerings that you have and kind of putting capital in, multiple deals, or are you just kind of seeing them kind of getting their foot in the door and just kind of diversifying going into commercial real estate?
Yeah, so the CrowdStreet marketplace today has three different ways that investors can invest. The number one way is still the investor joining, perusing available offerings on the marketplace, and then selecting one or more and then investing themselves. They're making the decisions, they're picking and choosing, and then they're investing directly with that operator. That's still today what we call the bellwether. It is what we now say is kind of the self-serve marketplace. The second way that investors are investing, which is now a rapidly growing way that they are, is through our blended portfolio strategy. And that is in essence a indexed fund style approach. It's a passive approach that each fund, it is marketed for about 90 days. It is then raised, it's pulled down, and it is run by an algorithm. And then so for the ensuing 12 months, the funds that are raised in each series are then algorithmically deployed into roughly 30 to 50 individual marketplace offerings using a blended portfolio strategy that looks for diversification of geography, by asset type, by sponsor type. It will look at, it does have a scoring mechanism in as well that looks at things like unlevered internal rate of return, level of debt. It will score higher or lower depending upon what the asset class is and so forth. And that's a factor that could create an over allocation to it, an under allocation, or no allocation. But in general, what it's trying to do is blend to kind of an optimized version of the CrowdStreet marketplace over roughly 40 or so offerings over the course of that year. And what that's doing for that investor is, for the investor that comes to the marketplace, likes the platform, but does not know how to begin picking and choosing, well, then now you don't. It's just the equivalent of saying you can buy the S&P if you don't want to pick individual stocks. It's kind of that direct corollary. The third way that investors are now investing through our marketplace is through our privately managed accounts. That's a scenario in which we heard over the course of the last few years, investors coming to the marketplace, getting active, investing multiple times, and then telling us that they want to do this for the long haul and that they want CrowdStreet's advice to continue to do it. That led us to launching our registered investment advisor at the end of 2018 called CrowdStreet Investments. And so now we have a growing investor base that are coming in and opening accounts at a minimum of $250,000 and saying, I want to get direct, customized advice for how I should build a commercial real estate portfolio. You guys have been doing it for 5+ years. you see a lot of deal flow. You have teams in place. You have the ability to really help me kind of get up the learning curve. And so that's what we're seeing. That's the third way. And now we have multiple investors there, and that grows by multiple investors per month. And so those are the three ways that investors are investing today.